Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, the koala bear of Wall Street, as I'm known in the Great Indian Plain tribes, the Chartnado. No, maybe it's better that it is the chart marsupial. That would probably be better. Anyway, we are having kind of a up and down day on the S&P cash, and of course the rest of the indexes too. But we are down 4.5 points on the S&P cash at the moment. We've got just about 2 billion shares, so there wasn't a lot of volume to the upside. We did try to go up to what is about halfway up to resistance. I think we're in a bigger trading range right now, from about 1938 down to about 1870. And I think we went up there, gave a little bit of it. And, of course, we still have a market that is pretty much ruled by dip buyers. They buy every dip. As soon as it goes to unchanged or a little bit more than what they paid for it, they bail right out. The market kind of pulls back. They buy the dips once again. And it is a market that looks to me like it's ripe for a huge gap down or an ugly close. And by an ugly close, I mean 10, 15, 20 points in the last 5 minutes, something like that, and or a 30, 35-point gap down in the S&P 500 overnight. And maybe we'll get that tomorrow. Maybe it's based on news. Kind of hard to see. I'm trying to actually cover one of our short positions, and got awful close within a dime, I think. I'm going to have to go back. I got my trading computer over on the other side, so I'll have to take a look. But it is going to be an interesting time. The only reason I'm probably covering one of them is it's getting into a fairly decent level of support. But I've got an order in. I think, well, we'll get it before the end of the day. And we're trying to get out at about 650. We were in at better than a 220 for the puts on this stock. And as soon as it closes, I'll probably talk more about it. But not a bad move out there. We've got several others that are setting up. But we have to see how this market closes. But I suspect in the next couple of days we're going to get a fairly decent gap down. And that's going to drive this market into at least a temporary low for expiration, and we'll probably get rid of the puts we have that expire this month, and we'll probably hang on to many of the triple short positions that we have in the newsletter and newsletters. But starting to see maybe at least one maybe is probably a good time to start picking it up. Now, one of the reasons why it didn't hit our tick was the option market makers were basically saying that there was absolutely no reason to pay a dime over what the equity was trading at. And many times what I'll do is just buy the other side of that short. So go long, and I've got puts on the other side, so I basically have zero risk set up and just wait for the premium to come back in. And when it does, then I'll cover. And the little snots on the other side who think that there should be no premium on the other side will still have to cough up their premium. But it is one of those things probably a little tough to do in a newsletter. I'm just hoping that that premium comes in before the end of the day and it hits our sell point, and we'll be happy. But that will probably be the first blood on this big operation cycle. We're going to talk about options and just asymmetrical bets in just a minute. Of course, it is a wonderful day out here. And when we look at just looking at the volume clip through and some of the other stocks out here, I do see several attempts to rally in some of the stocks I've had. But to me, it all looks rather weak so far. And we're off 4 points on the S&P cash. Yeah, man, starting off with just under 2 billion shares. So we'll see how volume goes throughout the show. Of course, the what are we off on the? We're basically flat on the NASDAQ. So we will be watching fairly closely here. Is that right? No, yeah, basically flat, maybe a little off. They're really trying to drive these NASDAQ stocks, and of course, all these big high flyers that had short positions, big short positions. We'll talk about those also today. Today in 1990, Wall Street Journal publishes a market guru's Joe Granville's forecast that the stock market will crash in a few days. Granville calls for the Dow Jones Industrial Average to fall below 2,200 by the end of August and to drop below 1,750 by the spring of 1992. And he's kind of off. Within a year, it was up 50%. Joe, of course, was always calling the downside, and he was famous for that. And, I guess if you call enough of these, eventually you'll be right. But to me, that has very little to do with stock trading. And we've had a few calls here at TFNN. I took one, a week ago Friday. And they're good questions. And probably the reasons that we get these is we don't talk about asymmetrical bets enough. And we'll bring it up for those folks that think that the markets can't ever go any lower. Of course, my treatise over the last few days has been that the truth passes through three stages. I'm still only saw one guy talking about probably lower S&P prices so far on CNBC. So I think we're still in the violently opposed stage of the truth of a market pullback. And we'll be watching it. And, of course, we'll wait until it's self-evident and everybody gets depressed. And when complete demoralization comes along, it will be time to cover. But we get these questions like, how can you be short? And the problem is people think that this somehow is a batting average thing at baseball. And, basically looking at this and stock market like you're coming up to swing and take a swing, and the most you could get would be a home run. Well, that's not the way the stock market works if you are doing asymmetrical bets correctly. Basically, Jim Rogers said something real stupid, and of course, it's chronicled in Fooled by Randomness, which is a great book by Nassim Taleb. And I'm going to just read this passage. But he's talking about Jim Rogers bloviating about why options are bad. Visibly, the statistic that 90% of all options positions lose money is meaningless, i.e. the frequency, if we don't take into account how much money is made on average during the remaining 10%. If we make 50 times our bet on the average when the option is in the money, then I can safely say the statement that buying options is another way to go to the palazzo rather than the poorhouse. And I didn't know what a palazzo was either, but it's kind of like a big estate in Italy. I don't know why you'd use that. Anyway, a great section, and that actually changed the way I thought about trading probably about 2002 or 2003. That is that, of course, the highest paid people in baseball do not have the highest average. They may get the most home runs. And, of course, even if you get a few hits, that doesn't guarantee you're going to put somebody across home plate. If we're looking for trades that will actually change our life-changing money, and we continue to try to put out singles and doubles, you'll get a few runs across. But there's a reason why huge home run batters are paid huge cash in the majors, and that is if you get a home run, you're guaranteed that you've got a run on the board. If you get a double or a single, maybe the guy behind you does or doesn't get it. Chances are probably about 50-50. So actually the guy that strikes out a lot more, that gets a run or two because he gets a home run, generally is going to put more people across that home plate in the end. And that's why this example here that 90% of all options lose money, really only thing you have to do is be right 1 out of 10 times on options to break even a lot of times. But if you can make 50 times The question is just how many times can you strike out? And, of course, probably the best-known baseball player is Babe Ruth, and he, of course, struck out more than any other person ever in baseball. So the question is just how many times can you strike out and wait for that big home run and fat pitch? And most people will try to make the singles and doubles only to see the game called by rain or something, and or a big black swan event, something like 9/11, the housing debacle. And they get so programmed in the fact that the market can only go up, it almost becomes impossible for them to sell. And there's a great quote in Jesse Livermore's book, Reminiscence of a Stock Operator, where he says, if you took all the people that the stock market made wealthy, their names would fill a library. If you took all the people that were made incredibly rich by the stock market and lost it all and kept it, or the ones that kept it, it would fill just one book. And that's generally the problem out there, is that everybody gets all invested, and all it takes is one big time to kiss all that money goodbye. Being long, being short, being a trader means that you can play both sides. But I'm always looking for that asymmetrical bet. If I lost half the time, but I get paid 2-to-1 when I do win on the short side, I'd be a fool to play the long side. And I've got several positions that look pretty good out here. I suspect that they're going to look absolutely stunning. And if I could trade on the long side here and make money, I would. When in 2000, the problem is we get a lot of new callers and people that are new to the market. When everybody was telling us it was the end of the world back in 2009, I was the one buying hand over fist stocks that had been testing their previous low on 10%. I bring this up from time to time, but I remember those stocks. Canadian Solar, it was out there testing a previous low right around $3. If you go back and look at it in March of 2009 and then go back about, I think, 6 months in front of that, you'll see that it had like 1 million shares, it had like 300,000 shares, and then it had like 50 or 30,000 shares, whatever it was just ridiculous. So I went through all the stocks, found the stocks that were testing lows with the absolute ridiculously lightest volume so that I knew I was safe. And those $3 stocks ran to 14 and higher, eventually $30. So I'm not one to kiss off being long, but I want to be long when it's at the bottom. I want to be short when the market's at the top. And above everything, I want to know that I have some hope of an asymmetrical bet, whether that's buying puts at highs with low volatility or buying the equities at lows like they're never-ending options and call options. We'll be back in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I had some questions about whether I'd get Nassim Taleb on the show. And I've tried to get him on about a year ago and a year before that. He pretty much says the same thing to everybody, and that is that he likes to go on shows like CNBC and talk to Leisman and call him a big dummy and basically ridicule him and tell him how stupid he is. Nassim's one of these guys that's really, really smart and can't take a moment away to remind people. But also he's very, very right, and most of the time he knows how stupid these people really are because he's put it out in a book, and then they'll bring up a bunch of stupid stuff, and he just knows he's wasting his time. So occasionally comes on, likes to ridicule the folks, and that's it. He doesn't like people that agree with him. I don't totally agree with him, and then I'd probably be called stupid myself. But there's some things that he does that I don't think most traders can do. Most traders can't wait around 4 or 5 years to win. He has, and of course he's been able to do that over amount of time. And of course, his payback, 50 to 1, 100 to 1 is not uncommon if you can wait 2 or 3 years to put positions on. And it's he's a pretty smart guy. Now, one of the questions that I get a lot, and then we've got some other questions and some news to get through, is really, can you do this all the time? The answer is no. But it's just like hurricanes. You know when the water's warm in the Gulf. You know when a storm comes out of Africa. You know that the conditions are right for something. You can't guarantee it. I'm not Joe Granville that's going to tell you everything is going to zero. I'm going to say that it is likely that there are options, that there are, or the conditions are right, like last month, where the conditions were right where everybody just walked away. In fact, that's what happened yesterday. We'll try to get into that with options. But everybody's kind of walked away and more than willing to see this market come back down. I suspect that's exactly what we're going to do. We're probably going to pop down, gap down in the morning, or we're going to have an ugly close. If we had an ugly close where we lost 15 or 20 points very quickly, that might help put in a low in the next couple of days. If we gap down, probably going to have to gap down 25 or 30 points, maybe even 40 points in the S&P cash to set up a low, and that would take me pretty much where I'm looking, which is that 1870, 1875 level on the S&P cash. We're going to have some real fear, I think, to put in a bottom in this market. But it could happen in the next couple of days. The conditions are right. If old Putin feels froggy, we could see it. After the bell tonight, CBS Corporation, CareFusion, Clean Energy, Capstone Turbine, Computer Sciences Corporation, Darling Ingredients, Consolidated Edison, Great Plains Energy, Hanger, Lionsgate Entertainment, Allscripts, Monster Beverage, NVIDIA, News Corporation, Post Holdings, Rubicon, Solar City, Sprouts, Spectrum Pharmaceuticals, Ubiquity Networks. Boy, I love the products that company makes, and if they can get back down there, I'd like to buy them. Vivus and Zynga. So what else do we have going on? Oh, got a little bit more news. The disaster du jour today is a digital coupons company called coupons.com. This is on the heels of heels. I didn't spell that right, did I? The sale, S-A-L-E. It did a cliff dive 2 days ago. It was a coupon company. Coupons.com has done the same thing. Company went public in March. A lot of these companies are sliver deals. And just so many of these IPOs have a ton of stocks in the background to actually push on the market. And probably he had a very dubious business to begin with. But when I call it a sliver deal, that means that they have so many shares. We'll say that they had 1 million shares at the IPO. 100,000 of those get traded. Some of these stocks, especially the one that probably the worst one was the company that, Caesars Entertainment. I think they came out with less than 3% of the shares at the beginning, and that thing is, that's going to blow up any one day. But of course, you can't short it with only 3% of the shares outstanding. They can run you out the door. But they'll continue to push shares out of the market for these stocks. And as one comedian I heard said, you go out there and you order a pizza and they give you the tiniest slice. It's the equivalent of all the people that win the lottery and tell you that they're going to give it away all to charity. It's that tiny slice. It's not the big slice that says I'm going to buy some houses and cars, but some smaller slices out there. And we'll be back in a minute. You can always give me a call at 877-927-6648. When we come back, we're going to look at Tesla from Wayne in Dallas, because he wants to do what I want to do, but it's going to take a quick finger on the mouse.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we're kind of bouncing around close to the lows of off of 7 points on the S&P cash. Volume, and not really picking up yet. 2.1 billion shares. We've got John from Philadelphia on the line. How are you doing today, John?
David, I wanted to call in and pay you a compliment for the thinking and thoughts you shared yesterday at the start of your show regarding options expiration and Weird Wally Wednesday.
Yep.
I encourage anybody listening who would like to understand some of the mechanisms at work to go back and listen to your archive show from yesterday. I wanted to pose a very specific question to you. If assuming the options market makers are largely the very large trading desks, well-capitalized players, and are amongst the most sophisticated of the traders, one might speculate back that week of Monday, that would have been Monday, July 7th, July 14th, July 21st, when the S&P cash was up near 1995. One might speculate those players might have been options players might have been selling out of the money calls or near money calls, perhaps even purchasing near dated and at the money puts, and made a directional bet for this decline that has occurred, and then seeing the implied volatility as measured by VIX explode higher. and then going through the process Tuesday into yesterday being delta neutral. Could you just elaborate with us or for us what the effect of that might be in terms of setting a floor, possibly very short term, on the S&P?
Well, what we really looked for on yesterday, which is the day most market makers go delta neutral, is what they expect out for the next 7 trading days. And at the top, it was we saw a lot of option positions started to be taken on, but most of those big option market makers will only trade the big stocks, and those have hung up fairly well now. And also, they tended to be very short stocks like Tesla, like Netflix. A lot of people were waiting for those to crack. In fact, we're going to talk about Tesla probably after this call. But what happened was the S&P, or the top stocks in the S&P, were all being fairly decently supported and probably being shorted a little bit. But it was one of these things where I think these guys shorted them and then tried to keep the market up and kept running the shorts a great deal. They were trying to distribute, and the easiest way to get the other shorts is get short yourself and then cover the short. That way you're not double long, right? And so I was seeing a lot of that, which was they'd run it down, try to snag bear trap shorts, and then pop the stock the next few days. But we still see Netflix and all the rest of the what I call cult stocks out here, stocks with astronomical levels of valuation that would take 10 years to grow into what they have. Netflix, I think, has bookkeeping issues. Tesla just has 10 years of growth already built in, and that's kind of what you get at highs. But I'm actually short a technology stock out here where they warned and it went back up. And they said it was going to be, the next 3 quarters are going to be challenging. And they ran it up anyway, just because a lot of people were short. So, when a company tells you they're going to have horrible earnings, I think you could probably believe them. That the stock went up into that only tells me that a lot of people were trying to boost the stock back up that were in it. And I know a lot of big funds that were in it were going to just bid it back up. People were already short and give you another opportunity to pull the trigger on it. So as far as I could see, most of the weakness had been in energy and some other sectors out there. They're trying to hold this NASDAQ up as well as they can. And my guess is that they're distributing a great deal of the sectors out there. And especially these cult stocks they're really, a lot of people are still really way too short these stocks. And we're going to get into talking about that. Now, you were talking about how options expiration changes things. Yesterday, we were looking at going into Wednesday. The options were showing the SPYs to expire about 196, 197. That dropped basically 4 points overnight. My guess is it's going to drop again today. But I don't know if you can see in the Denner and Tigers TV. But what really happened yesterday was the downside curve for losses flattened out way down to 185.
I see that.
And that's where we saw the huge change, and that's when I'd say they're stepping away from huge losses at the beginning. In fact, the curve really didn't start hockey sticking until about 183.5 on this SPYs. So these guys got out of the market real quick. Now, the other thing is that nothing really changed for the Septembers. It pretty much stayed fairly close to what it was. So to me, it looks like they're looking for a downside and then a pop into September. So that's how I read this at the moment. They didn't go changing anything in September. They're not looking for much higher than we're at now in September, but that really didn't change. So to them, they're looking at short-term weakness, probably thinking we go down to something like 1870 and rally back out of that into probably the first part of September, and that's maybe when we get the next big leg down, ABC down into lower prices if we don't get some kind of energy back into September. So to me,
that is that's very helpful elaboration. I appreciate that.
So I'm looking.
David,
go ahead.
No, I'm sorry. You please.
No, I'm done.
Very good. David, I'd like to ask just a parting question or request, if you have time today or tomorrow. And I would love to hear your thoughts on the motivations behind the potential merger between Sprint and T-Mobile. Of course, last night, Sprint SoftBank announced that any discussions it was having with Deutsche Telekom and T-Mobile had ceased, and that no merger would be considered between the two. And the mainstream media was touting the fact that, oh gosh, the Federal Communications Commission as a regulator was now on the side of consumers to ensure four players. But if you look at it, of course, Verizon, AT&T are incredibly powerful, and keeping Sprint, T-Mobile separate ensures that Verizon and AT&T maintain dominant power. And I'm wondering if you might share with us at some point in the future your thoughts on the true motivations for this regulatory action, supposed.
I think it has the same thing to do with Fox. I think that everybody is nervous and they want nothing of these mergers right now. They are. I think that the powers that be think that we're probably at least, maybe the next 9 months, at least have a top end that won't be challenged, and they don't want to be seeing this market pull back in the AOL Time Warner deal of 2000 buying at the top. And I think that all these deals are now on the sidelines. I can see a pop into September where they're trying to push out this big pig of Alibaba.
Right.
And maybe that's the next top in there that we hit, and all the oxygen gets sucked out of the room, and then, we sell off maybe into the end of the year or something like that. But I can't see a lot of strength between now and the elections. If we're going to have a Christmas rally, I guess it probably happened right after. But and maybe, the fact that they come out the day after the election and say, yeah, we're going to raise the interest rates 0.25%, maybe it's one of those buy the news things, right? Everybody's looking for it. As soon as they start doing it, we'll have a reaction, and then that'll make us a low, and maybe then we can rally into the end of the year or something like that. But I know a lot of people say, I think that's kind of what's happening now. I see absolutely with the Fox deal, everybody's saying, I don't believe it. They're going to come back, and maybe they will. But my guess is that they won't even talk for 6 months or a year. So I think the same thing in T-Mobile and Sprint, that it's a convenient excuse. The government hasn't done anything to anybody about monopoly power and anything else. And on the side of consumers, I haven't seen them twitch. So it would be rare to think that they did anything in this T-Mobile or Sprint deal. I think there's actually a fairly decent good case that they can't compete on the economies of scale and should do it. I hope that they don't, but because I don't think it'll be good for consumers. But I think that for them, thinking that if they're going to compete long term with AT&T and some of these other big companies, I think it makes sense for them to have the economies of scale. But easy, convenient excuse, in my opinion.
David, thanks so much for the thoughts. I appreciate it.
You bet. So anyway, we're looking at this option curve. And we're going to get, thanks, John, again for the call. Anyway, we've got in fact, I should have copied it yesterday, but to me, by the time there was $20 billion on the other side of the S&P cash, it would have been about 190 yesterday as we went into the day. It's now down to 183.5, and that's what I mean by opening up the whole downside on it. They used the volatility to go ahead and get that out, and so they didn't want a lot of downside. Now, this is what happened last month, and 2 days later they came back in and bought it. But this is the trap door open, and when it closes, then I'll say okay. But in the meantime, I'm willing to sit on my hands for a couple more days. But it also means that I assume that there is the opportunity for the ugly close and or for the huge gap down and severe pessimism, and probably setting the low in for options expiration. We do have a great deal of puts on this month, and so I'm getting to the point now where it's getting the time to probably start closing out some of those positions. So I'm going to be watching it close, but not walking away from it today. I think that we've got more to do out here, and we're off 8 points on the S&P cash with closing on a 2.2 billion shares. So we had a couple of questions in the den. We had some email out here. I wanted to go to Tesla, which we have up in the Tiger chat room and, of course, on Tiger TV. This thing looks awful good, and this is one of these stocks that I'm talking about that's got fairly decent short interest out here. The solar stocks, these things could bust. Now, what I'm expecting is that Tesla will blow through this February 26th high at 265 with 24 million shares with a whole lot of light volume, and they will run this thing maybe to 280 intraday, and then the close back below 265 would be your confirmation. But to actually get this, you're probably going to have to use puts, and you're probably going to have to wait till people are puking these puts up. And that means that you're going to have probably about a 5-minute window where this thing is $15 above that, maybe at 280, and the thing just, you see it up there with no volume, and you can pull the trigger on it, and that's going to be it. But you're going to probably have to buy, September's, October's, to let this thing play out. But you've got a high volume low that's untested on May 9th at 20 million shares at 177.22, and this thing is probably in that trading range. But I've watched Tesla long enough and watched it intraday to see that these guys are more than willing to manipulate the stock, and especially with the short interest, drive this thing up through the highs as the market craters. Probably at the market low, you're going to find Tesla at its particular high, and that's going to be the hardest time to pull the trigger on this thing, is when it goes against the market. But these guys are working very hard to distribute the stock, and when you do that and you have a lot of cash, you can get basically a stinky stock with light volume to run counter to the market when you've got enough shorts that will get squeezed. And of course, part of the bad side of being short is that shorts are notoriously the weakest hand out there, and for the most part willing and more likely to trade very quickly. So as soon as they start buying, of course, other people have to buy, and it just becomes a feedback loop. And the higher the short interest, the bigger the feedback. My guess is you're going to see this thing pop, and it's going to be the hardest decision you ever made. You're going to sweat more than somebody in rehab drying out. We'll be back. Courtney Love in rehab. You're going to shake like her, pulling the trigger. We'll be back in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
It is decision time. We're probably going to see the truth of the matter here in about 30 minutes as we go into the close. Of course, Tom O'Brien is warming up in the bullpen, getting ready to call the last hour. After him, of course, we're going to have the one and the only Andy Heck, who used to stalk me. Now he stalks me from afar. I've got a 500-yard restraining order on him now. So he starts at 5 o'clock. But he had a nice trade out there. We both had different plays in the energy sector. Mine, I think, has a little bit more legs, so I'm going to hang on to it. But he cleared one out for his listeners fairly well today. So congratulations to him. When we were talking about some of the stocks that moved out here that are short, these stocks are a great deal are being supported. One of them is Stratasys Systems. This thing had a huge gap, gave about half of the high off today at 120, and that's where I'm telling you a lot of these stocks are going to rally and then fail, and you're probably going to get something like that. I don't know what Tesla's already reported, so maybe there's another news event on the horizon, but my guess is that you're going to see this kind of action, and it's going to take you taking a flyer on Tesla to actually get anywhere close to it. And this one, you would have had to pull the trigger today. I think you would have been right long term on this thing. I think it comes back and fills this gap as the market starts to fill its lows. And then you're going to see these things actually break. Of course, this needs to come back down to the $85.30 level. Almost all these 3D stocks are heavily shorted. I made a lot of money off the top. We put out a special report and called the top pretty much within a day or two in the 3D stocks in the Tech Insider, and hit them a couple of times in the daily newsletter, and basically kept everybody out of them in the long term. But I still think we've got pretty much decent ABC setups that will take us back down to some fairly decent lows from about a year and a half ago, some consolidation, and we're probably going to find some decent buys back in there. But a lot of times the earnings keep getting rolled down. I think the Stratasys, I'd have to go back and look at them. I think that the earnings calls were rolled down a couple of times so that they beat a number that continually gets moved down. To me, what is that, like playing limbo and just keep moving the bar up until you make it? But to me, that's it. I think these companies have a huge future. The question is, are they ahead of themselves? And I think they became what are those dolls that were being traded? The Beanie Babies craze, and far beyond what they're doing. Of course, DDD bought yet another company out here today. This one, we talked about being set up in a long-term ABC down to 30, and even with SSYS out here doing well, it did the same thing. There's a few more things going on out here, but probably the most important is just watching the close out here today. Volume starting to pick up. We're at 1910 on the S&P cash, looking for the ugly close, looking for the huge gap down, and a few things to basically set the B point of a bigger ABC down. I think that B point is probably going to be 1870, 1880 on the S&P cash. And it probably is going to come and go in about 2 days. I think it's going to be huge and violent and finally wash out a lot of these folks into a light volume August, where we may see at least an attempt to push this back up, get Alibaba out the door in September, and then start our way back down. Anyway, see you tomorrow. Same bat channel, same bat time. And remember to sell when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.